Hello again, everyone. In this technical analysis of the stock market video, I call it Bulls Die Hard because, when I look at the market, where it's at, where it's come from, it's not surprising that there is an extreme amount of bullish enthusiasm that's going to die hard. We're at the end of an 11-year bull run, which is at the end of a almost 28-year Elliott wave cycle, which is at the end of a large super cycle move, okay? And so when you're going through that kind of topping process at the end here, it's not surprising at all that you're seeing extreme behavior, extreme bullishness. And I'm not the only one that's noticing. This article from a little over a week ago, extreme behavior is on display everywhere in the market. Pretty interesting article. All right, so today we're going to take a look at the S&P 500. One of my key indicators, the McClellan Oscillator. Take a look at the VIX also and see what it's telling us. Check in on gold. Haven't talked about it in a couple weeks. And in honor of Elon Musk, we're going to look at his public company, Tesla. And I say in honor of Elon Musk because they had that successful SpaceX launch today. It was pretty spectacular. I love all the camera shots and everything. It was really, really pretty cool. Anyway, all right, let's take a look at the SPX. Okay, we have had 46 trading days to the high that occurred on Thursday since the bottom, since the March 23rd bottom, 46 trading days, exactly twice as many trading days as it took to sell off, okay? 23 down, 46 back up. 72.9% retracement. We lost 35.9 from intraday high to intraday low. Now we'll see where we're at, and let's drill in, take a look at the 65-minute or the hourly view. This last move up from March 14th low looks like a rising wedge type ending diagonal pattern in here to me. And the wave count I've got on it is that we have done another little ending diagonal pattern within the 5th minute wave. So there's a decent chance that this C wave of the ABC move for this zigzag wave 2, this is what I'm talking about, the whole move up from March 23rd looks like a zigzag. It's what we've been expecting. And it looks like there's a decent chance it should be complete. Again, there's no Elliott wave rule that says the C wave has to be a certain length as a percent of wave A. All we're looking for is 5 complete waves. So now as I look at this and say, okay, well, what's going on here? The last hour of the day on Friday had some pretty wacko type moves. I mean, they were bouncing all over the place on Friday because waiting for the president's press conference, his news conference, and then what he was saying, and as he was talking, it was going all over the place. And then the last hour of the day, we got this rally back up. But it's pretty interesting that it came right up to the underneath trend line here of the rising wedge. So we'll see if that holds or not. And we drill down to the 15-minute chart. What's really interesting, it looks like the first move down was a 5-wave move, and then possible zigzag back. So if this is the case, either Monday or very soon thereafter, we should be rolling back over and heading south. So we'll see what happens. We'll see if that plays out. That's what I'll be looking for. And the reason why I'm focused on 5 waves is because in Elliott wave methodology, 5 waves tells you the primary direction that you're off and running in. Okay, so that's the SPX. Let's take a look. I want to go back to the 65-minute view, and then let me zoom out a little bit, and then let's just keep in mind this move here from May 14th, okay? And what I want to do is I'm going to pull out the McClellan Oscillator. Actually, what I'm going to do is just take it back to the daily view and just keep it simple, okay? So we know what has been going on here in terms of the rally, etc. But when you look at the McClellan Oscillator, look at this first peak in here on April 9th. Okay, that was the first part of that leg, right? And that is, where is April 9th? April 9th is right back. Let me see if I can get this down a little bit lower. It's March 26th. Here's April 9th right here. So this first peak on the McClellan Oscillator occurred right in here. Then we had this second peak on the McClellan Oscillator on April 29th. Then we had the third peak right here on May 27th. And that is right here. So peak in the McClellan Oscillator, peak in the McClellan Oscillator, peak in the McClellan Oscillator. And those peaks are declining. So to me, it's telling me that there's a bearish divergence going on, not confirming the move in the market. We are still very overbought, although we've come out of this extremely overbought zone. And right now we've pulled back a little bit. So the McClellan Oscillator, which is a breadth indicator based on advancing and declining and moving average calculations, etc., has not been confirming this move in here ever since this high right here on April 9th. Okay. And then let's take a look at the VIX. Now, it's real interesting that the VIX, the intraday low here on May 12th was 26.00. The intraday low right here last Wednesday was 25.92, so just fractionally below that. But the market, since the May 14th low I talked about, this last push up, the last leg up, what I labeled a C wave on the SPX, okay, that's been pushing up. And you would think that the VIX would then continue cratering. That would be risk, that the fear would be evaporating still, and it would be selling off down here towards the 20. But it's stopped. It's kind of gone sideways over this last period since May 14. So it's really, really interesting. Is the VIX trying to tell us something? Is it telling us that it's just not confirming this last move? And are we about to turn? So it's like a little flag that's waving right now. So that's just one more thing that's going on. We're still seeing it in the put to call ratios, etc. Let's take a look at gold. Okay, so here's GLD, the gold ETF. I've got that it topped out here on the high on May 20th with a high of 164.96. Now, there's a decent chance that that is the high. My expectation is that we are going to turn down and start going in this direction, okay? Because I believe that this big B primary wave is part of a large zigzag multi-year pattern, okay? So this is what we're looking for in terms of the turn down. So right now, what we're looking at, if we drill down in and take a look at the 65-minute chart, you can see that what has happened in here, I'm going to zoom out a little bit. This looks like a big sideways triangle that we broke out of here on May 7th. And we got a nice 5-wave move here in terms of the push up here to complete wave C of Y. All right. So now what have we been doing since then? So we've had a first thrust down, and I labeled it wave 1 and a wave 2 pullback. And we got excited when we saw the 5-wave move here. But then we got a pretty dramatic move back up here now. So why do I have a box around this? I've got a box around it because what this is telling me is if we continue to push higher, this is Thursday's high and this is Friday's action. It was down 44 cents on Friday. If we push above this high, then that to me puts the odds much more in favor that we are going to continue, that this was not the part of a new move down just yet, that it probably was a zigzag pattern and we're going to punch higher, okay? We'll see whether Friday's move is the start of something. We come down, and if we take out this low, I think it's going to confirm that we have a 1, 2, 1, 2, and we're on the way down in terms of working 5-wave sequences as part of a new motive wave, okay? But we need to have this continue to sell off if that's going to happen. And again, if we take out this high, I think the odds favor a push to new highs. So we'll see what happens with GLD. All right, let's take a look at Tesla. Okay, here's all the data I've got on Tesla. And yes, I'm on semi-log because of the long-term perspective of it. I mean, I always look at semi-log on a long-term picture, semi-log or arithmetic, which one looks better? Which one gives you better channeling, which one gives you a better picture of the waves. And I think in this case that it's the semi-log. So right now, I think that we had a cycle wave 1 move that peaked here in 2014. And we've had this very complex sideways cycle wave 2 in here. So this is the data that I think in terms of the wave structure. Here's what I think is unfolding. It was a big WXY sideways move, which connects, two large corrective patterns. And now I think that we are off and running in a third cycle wave. And that third cycle wave really took off with this move that occurred towards the end of 2019 into the beginning of 2020. So my take on this is that it still looks bullish to me. I think we had this big primary wave one of the third move. We had a sharp wave two pullback. I think there's a decent chance, and I say that I think that's complete because it looks like a zigzag. And if we drill into the daily, here's what I'm talking about. Looks like a zigzag came back into the prior fourth wave of one lower degree. And I like that. It was a nice deep move. And then we're off and running in a 5-wave move for wave one here as a part of the third primary wave. Well, I don't think the wave two pullback's complete just yet. So we'll see what kind of a pullback we get with that. But this is the bullish scenario. And right now it looks, the longer term picture to me looks good on Tesla. All right, that's it for this weekend. If you felt like the video was helpful, hit the thumbs up. If you're not a subscriber here on the YouTube channel, hit that little subscriber button. If you'd like more of this kind of information on a regular basis, head over to joehenches.net. Check out my website, my membership, and become an insider member. We talk about this kind of detail every day in the membership. All right, everyone, have a great weekend, and we'll talk to you on the next video.